Wall Street closes the session higher following a higher than expected increase in the August inflation data, firming bets of a Fed rate cut. The Dow has surged 600 points. Markets in the Asia Pacific have also opened higher, tracking gains on Wall Street. The GIFT Nifty is indicating a gap up start for our own markets. Amidst early signs of easing trade tensions between the US and India, Commerce Secretary of the US, Howard Lutnick, says that the US will sort out a trade deal with India as soon as it stops buying Russian oil. India will report its CPI inflation numbers for the month of August at 4 this evening. A CNBC TV18 poll sees the headline CPI at 2.2% compared to 1.5% in July and 3.6% from last year. Infosys has announced its biggest ever share buyback at 18,000 crore rupees. The company will buy back 10 crore shares at a price of 1,800 rupees, which is a 19% premium to yesterday's close. And crude oil prices slide as concerns over possible softening of US demand and broad oversupply offsets threats to output from the conflict in West Asia and Ukraine. Gold prices continue to hold steady as the Fed rate cut bets have solidified. The most awaited day of the week is here. It's a Friday. Good morning to all of you all. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have started off. And of course, carrying on from where the US markets left off last night, it's a positive start to the Asian screen as well. Most of the indices trading with gains. The Hang Seng is now up 1.5%. The Taiwanese index too trading with gains of almost close to 1%. The Nikkei, which hit a record high in yesterday's trading session, continues to do well for the third day running, 0.6% higher on the Nikkei as well. The Kospi trading with gains of over 1%. That too is closer to record high levels. The only subdued start has been by the Shanghai Composite, which is trading with gains of just around 0.25%, but it dims in comparison to how the other Asian peers are doing with gains of anywhere between 1% to more than 1%. So a positive start for the Asia Pacific markets. Look at the GIFT Nifty as well. And after 7 days of gains, we are now in set for an 8th day of a positive opening for the index. The implied open currently suggesting an 80-point uptick, and by that we might open close to the recent swing highs of 25,154. That's the important level to watch out for on the Nifty. Closed above the 25,000 mark yesterday. 7th day of gains. Signs are in. We might head for another positive start and another weekly gain as well. But to set you up for today's trade, we are being joined by our research team with the trade setup and the stocks that are likely to be in the news in today's session. First up, Vamakshi is here to get us all the important market cues. Vamakshi, good morning. What is on your list today after 7 days of gains?
Well, good morning, Hormaz. Of course, the market has gained continuously for the last 7 days, and hopefully we're on track for the 8th straight day of gain. And, this is the longest gaining streak that we've seen in the last 5 months. Of course, yesterday's gains were quite modest, but, the Nifty has finally managed to sustain above the 25,000 mark, which it had attempted to cross in the previous session as well. Now, the trend that we've been seeing with the Nifty is that of consolidation. Take a look at 5th of September. The range was 211 points, and since then the range has almost halved to around 100 rupees or so. And when we look at the advance decline ratio in yesterday's trading session, that was 1:1. The gap between the advances and declines narrowed, and the mid cap and small cap index will also come up for you on the screen. So both of these indices didn't do much in yesterday's trading session. Now, who were the outperformers? It was the media index, energy, PSU banks. All of these indices were up in trade. Apart from that, take a look at IT and auto. On the flip side, these were some of the sectors that saw some profit taking. Now, the handover that is coming in from the US markets is extremely strong. All 3 indices closed with good gains. The CPI reading showed a 0.4% increase, which is higher than what the street was penciling in. But on the flip side, the jobless claims rose by 27,000 from the previous reading, reaching the highest level we've seen since 2021. So therefore, that sort of fuels hopes of a rate cut from the Fed, and resultantly the US markets were up. Now, in today's trading session, we'll be keeping an eye out on our own inflation number. India's CPI will be disclosed today. Take a look at UK GDP number as well. Apart from that, capital market stocks will be in focus. There's a SEBI board meeting scheduled today, so we'll be waiting for any outcome that comes through. Apart from that, PSU banks will also be in focus because the government is convening a 2-day banking reform meet called Manthan with PSBs, and PSB consolidation is likely to be on the table. And lastly, from the primary markets, it happens to be the last day to subscribe for Urban Company, Dev Accelerator, as well as Shringar House of Mangalsutra. Now, this is what the trade setup looks like for today, but the GIFT Nifty too indicating a positive start.
Absolutely, a positive start for the GIFT Nifty. Vamakshi, thank you. Upasana is now here to list out the stocks you need to keep an eye out for today. Upasana, good morning.
Good morning. First up, let me start with Infosys. Company has announced one of its biggest buyback till date, and board has approved buyback of 2.4% equity at 1800 per share. That is at a 19% premium as compared to the current market price for 18,000 crores. Next up is Bharat Forge, the arms science contract with Grade 1 for supply of artillery system critical spare parts to UAE, and also company has announced a strategic MOU with Windsors to advance UAV operations in India. Next up is JSW Energy. The company commissions 317 megawatt capacity in August. With this, the company's total installed capacity stands at 13.1 gigawatt. Lodha developers also in focus as the company signs MOU worth 30,000 crores with Maharashtra government for green integrated data central park. Next up is NBCC. The company signed MOU with Rajasthan State Industrial and Investment Corporation for infra projects worth nearly about 3,700 crores. Next up is RailTel. Company has received multiple orders. The company has received work order worth 32 crore from Panvel Municipal Corporation and 71 crore projects from Nashik City. Next up is JBM Auto. Ecolife Mobility gets $100 million capital investment from IFC, that is International Financial Cooperation, to scale up company's deployment of e-buses. Next up is JSW Infra. The company's arm acquires brownfield rail sliding in Karnataka for 57 crores. And lastly, coming to Cohance Life Sciences, the US FDA has conducted inspection at company's manufacturing plant at Andhra Pradesh with zero observation. So all in all, these are the counters that we'll be closely looking out for today.
Upasana, thank you for that update. Lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. Finally, a close above 25,000. Is the FNO data indicating a move higher?
Well, finally a close about 25,000, like you pointed out, 7 days of straight gains, and we have the GIFT Nifty indicating that the open will be positive as well. So that's important. But, yesterday the good part was the Nifty Bank led the gains. We saw some profit booking by the IT index after a big rally in the earlier part of the week, and the auto index as well, post GST announcement and pre that as well, have been on a tear. So yesterday and the last couple of days, we've seen the auto stocks pause for a bit of a breath. But the Nifty Bank, which led the rally yesterday, is at a crucial level. It closed at 54,669 and the 20-day moving average is at 54,666. So make or break level for the Nifty Bank. If it sustains above this level, we have a 1,000-point runway on the Nifty Bank on the way up from a technical standpoint. The good part yesterday was we saw some signs of early short covering. Earlier, there were some longs that the FIs were building, but Nifty and the Nifty Bank, the open interest came down even as the indices moved higher. And that told you that there were some shorts that were covering their position. And that's what data suggested as well. FIs bought 636 crores in index futures, added about 1,200 longs, but more importantly, covered 2,145 shorts. Does it move the needle? Not by much. But remember, in the last 5 days itself, the FI longs have inched higher from 7.4% to 10.8%. And yesterday's up move in long exposure came in on account of short covering. So short covering typically first happens slowly and then suddenly. Let's see whether that sustains or not. For that to happen, the Nifty has to close above 25,100. Why do I say that? Because there is a lot of call writing at 24,950 for a premium of 150 rupees. We've also seen base move higher to around 24,900 to 24,950 because we're seeing call writing at 25,000 and 24,950 as well. The Nifty important level upwards of 25,100 is 25,154, which is obviously the August 21st high post Prime Minister's Independence Day speech and the rally that we saw. 3 stocks I'm watching out for. 1, OFSS enters FNO ban. Obviously, globally, there's been a big move in Oracle, no relation with India, but that's something we'll watch out for. And a lot of short positions added on Angel One and BSE. If no adverse ruling comes, then maybe these shorts will have to position themselves for a covering.
Keep an eye out on both of these names. Of course, Mangalam, thank you for that. And the big news of the morning, Infosys, the buyback has finally arrived after a long wait. Last evening, the largest ever buyback announced by the company. Rima is here to break that down for us. Rima, morning.
Hi, good morning. Indeed, a very large buyback. 18,000 crore is the buyback by Infosys this time. A tender buyback at a price of 1,800 rupees per share. This is a 19% premium to the stock price. Now, the company has said they will buy back 2.4% of the outstanding shares. This would be the 5th buyback done by the company and the largest ever. The last one was done towards the end of 2022 and 2023, and that size was 9,300 crores. So effectively, the company's practically doubled the buyback size, and it's also come in much higher than street estimates. You remember that Morgan Stanley note, they were talking about a buyback of about 10 to 14,000. Most of the analysts we spoke to said it should be about 14,000 crore. So compared to that, 18,000 crore is actually much higher, and it's a tender buyback at 1,800 rupees. And this will take some time for the company to close, which means in the interim, you are going to get some earnings prints, maybe Q2, maybe Q3 as well. And this buyback will support, it will be supportive. Even if the earnings are weak, you will always have that cushion of a buyback supporting the price. But big news, and I expect the stock to do well today.
Indeed. We keep an eye out on Infosys. Rima, thank you for that update. Take a short break. All the global updates from the other side. Stay tuned. Welcome back. Now, amidst early signs of easing trade tensions between US and India, the US Commerce Secretary Howard Lutnick has said that India must make meaningful concessions, starting with reducing their reliance on Russian crude to maintaining strong economic ties with the US. Listen to what he had to say.
We're going to sort out India. India basically has to open their market, has to stop buying Russian oil. People don't remember, India didn't buy Russian oil before the war with Russia and Ukraine. They had 1% of their oil was from Russia. And now 40% of their oil is from Russia because we've sanctioned it so they can buy it, $7, $10 a barrel cheap. So they're buying it, refining it, and then selling it to the rest of the world and making a bundle. So the president called nonsense on that and said, you got to stop that stuff. So I think India will sort it out once they stop buying Russian oil.
On to Wall Street action then, and the weekly jobless claims showed a jump to the highest level since October of 2021. Now, the traders are also anticipating that the latest reading of the key inflation gauge will not stand in the way of the Federal Reserve lowering its benchmark interest rate next week. And as a result of this weak labor market update, the Dow Jones and the confirmed certainty of the Fed cutting rates next week, the Dow Jones ended with gains of over 600 points. The S&P 500 and the Nasdaq, all of them ended at a record high in yesterday's trading session. The Dow above 46,000, the Nasdaq above 22,000 as well. That the big trigger of yesterday evening before the jobless claims came out was the consumer price inflation, which also came in hotter than expected, mind you. The jobless claims accelerated and it was a mixed signal for the Fed policy next week. CNBC's Rick Santelli brings us the fine print of that.
Let's look at initial jobless claims, shall we? Now, given their seasonalities when you have things like Labor Day, holidays, but ultimately, just on the surface, 263,000 on initial claims. That's the biggest number going back to the fall of 2021. And it doesn't end there. We also had, of course, our August read on the Consumer Price Index. And that inflationary group of data points was warmer than expected. However, let me rephrase. It was very close to expectations, but sequentially warmer, meaning 0.4 on the month over month. That's higher than last month, but as expected. Take out food and energy, the core, 0.3, a little hot based on history, higher than our last look, but as expected. If you looked at the year-over-year headline, 2.9, as expected, hotter than the rearview mirror by 0.2. The only number that wasn't hotter, that was equal expectations and equal sequentially to the rearview mirror, was year-over-year core at 3.1%. But that's a 3 handle. The Fed's objective is 2%. And I know that the PCE is closer to 2.5, 2.6, their favored inflation gauge. But it seems to me that we see a market in equities continually making new highs. We see an interest rate complex that looks like rates want to go lower, but the 10-year seems to be fighting to stay above 4%. Ultimately, I think we're trying to match the data with the market performance. And I believe that the interest rate complex may find more selling going into the weekend because I thought many traders looking at the flattening yield curve were expecting the 4% level to be breached in a much more significant way than the 1 basis point we saw today after the 8:30 numbers. As for tomorrow, University of Michigan sentiment, and that will be the end of an important week. And this week in particular, not only the last week of important top-tier data. We've had the job report, PPI, CPI, PCE data, which means it's up to the Fed next week on Wednesday to decide. 25 basis points is built in. They'll give us 25. Many thought we could see 50 with the data points today, but if the market doesn't price it in and Fed guidance doesn't allude to the fact that it is or isn't priced in with respect to whether they believe it to be accurate this close to a meeting, no surprises. 25 basis point cut most likely on Wednesday.
And the CME Fed Watch tool also indicating a 93% probability of a 25 bips cut next week from the Fed. Let us also hear what economists had to say about this inflation data and the market reaction to that.
It's going in the wrong direction, that's for sure. I do think we're seeing some tariff price pass-through. Core goods inflation has accelerated over the past couple months, which is where you would expect to see that tariff price pass-through. So, it does look like, as was mentioned earlier, the core PCE number, which is what the Fed focuses on, that's going to hang out pretty close to 3%, we think, when we look at both the CPI and the PPI together. So that's not a great story. On the other hand, I think there's clear evidence that the labor market is weakening, and that seems to be taking precedence in the Fed's thinking here. I'm not so worried about this morning's claims number. It seemed to be a lot concentrated in Texas, looked a little fluky. But last Friday, we did see an ongoing rise in the unemployment rate. And I think that's going to be, the real story here, because if that really continues, of course, then the downward pressure on wages presumably would halt any worries we're going to have about inflation in, 6, 12 months from now.
Certainly, we have seen that with the inflation numbers today, the Fed is probably not going to be cutting rates by 50 basis points in September. However, it did add another rate cut this year to 3 rather than our earlier expectation of 2. So I think that would be an encouragement. Also, when you look at the fact that we are seeing new all-time highs, not just here in the U.S., but also overseas, that is a confirming factor that tends to improve the average price performance 3 months out, as well as the frequency of advance, to the point where I think investors really are trying to find reasons to sell stocks when, in fact, that's probably what's going to continue to support and maybe even propel them.
So not a 50 basis points cut, but 25, but 3 instead of 2 for the rest of the year. And that's the view coming in for the Federal Reserve. Take a short break. On the other side, we get you excerpts from our conversation with the CEO of Dabur. Stay tuned. We'll be right back. Welcome back. Now, the new GST changes are set to kick in just 10 days from now. The expectation is that a huge consumption drive is on the cards and consumers are the biggest beneficiaries. My colleague Shivani Bajaj caught up with Mohit Malhotra, the CEO of Dabur India, to understand his views on the GST rationalization and how will it impact the industry. Listening.
No, I think it's fantastic because we never expected this kind of a reform will actually come into play. But I think government has actually surprised it, and the reforms have actually come at a time when the food inflation is very high for us, and the whole country is reeling with a lot of consumption going down. So the consumption is almost at a very big issues that we are facing, especially the urban consumption. So this GST reform will actually completely resurrect, I think, the consumption. The consumer confidence index will go up. Because the consumption will go up, the investment will go up. Because the investment will go up, I think there'll be more revenue and more money in the hands of the farmers also. And I think entire ecosystem will actually benefit out of this, right from the farmer, which is the farm, right to the folk, which is the consumer who's actually using it. Yeah.
Okay. So you spoke about consumption and how this is strategically, timed just ahead of the festive season. Is there a ballpark figure in terms of percentage that you see the consumption growing from here in this particular festive season?
You know, one unique thing about this is that these GST reforms are actually coming, which is going to bolster the consumption in urban India. And urban India will actually benefit from the GST reform. So it is just not a focus on have-nots, it's a focus on haves also. So the middle class surge will actually happen. I can't exactly give you the number, I think it depends. But I think there will be a consumption impact definitely in the long term, which will actually happen.
Okay. You also, the last question, sir, you also spoke about, how there was a disparity between taxation of loose items and then when it was packaged and added value to. From a perspective of Dabur, how do you see that from a Dabur portfolio perspective? How is that going to benefit the company?
You see, a lot of classification issues have been actually resolved. One example I gave you earlier, what used to happen is the classical medicines used to be taxed at around 5%, which were all generic medicines, and the branded medicines, which are more high quality medicines in which we are adding value to it, the entire value chain is more improved and better quality, that were taxed higher. So it was almost a penalty. So why would a consumer go for a high price product when a low price product is available, so he used to compromise on quality. So I think consumer will benefit because he get a better quality product, albeit now at a similar pricing. So we'll be able to reduce the prices of those products also and pass on those benefits to the consumer. So that entire anomaly between generics and branded has been resolved from my point of view. So if you look at paratha also, unbranded paratha and a branded paratha are now going to be taxed at the same rate. So it will reduce the gap between unorganized sector and the organized sector to a great extent.
And with that, we call time on the final edition of Power Breakfast for this week. From me and the team that put this show together, thank you so much for watching. But don't go anywhere. Bazaar Morning Call on the other side to set you up for the final trading session of this week.